Now, when we look at commercial real estate, which as we know is in a lot of trouble right now, and we know that regional banks have a lot of exposure to commercial real estate, how does the Fed's Bank Term Funding Program, which allows banks to take advances from the Fed, how does that secure the banking system? And what are your thoughts on commercial real estate as a whole?
My views on commercial real estate are bad. Like there's the numbers are floating around out there that, the regional banks took on way too much commercial real estate relative to their historical averages during the zero bound years. And, they, like everybody else, was going out and looking for yield, right? And they got sucked into this problem, and they've got big gaping holes in their balance sheets as well. The commercial real estate industry is going to face a real comeuppance, and it's beginning, and we're in the beginnings of it right now. The private equity guys got fat and happy at the zero bound, funding every manner of commercial real estate enterprise that they could, lay a couple $1 million on, right? They're now underwater, and their exit strategies are all blown up. So what's going to emerge now to bail them out, in effect, it's not bail them out, is the market's going to correct this by offering, the private loan markets are going to then offer them exits, but they're going to offer them exits at 50, 60, 70% haircuts. At that point, this could be an insurance company. This could be a pension fund, right? And that's actually what the pension funds and insurance companies have been, desperate for, which is to get access to some reasonably high yield at a good price. Right. The same thing that, we do as stock investors. We go, oh, look, that company's paying a 9% dividend, trading at a PDE of 4 with a debt to equity ratio of 20% on their balance sheet. Well, that's a buy, even for the yield alone, even if it is a value trap, some other, argument. Right. Look at most oil majors, and you're looking at free cash flow yield. That's just insane right now. But in the commercial real estate space, you're going to see the same thing where the private loan markets will come in and support some of these, will offer out, bailouts or, exit strategies for some private equity funds. So they have to write down their assets and their balance sheets. And it is what it is. And, they used to call him Private Equity Powell, but these people can't get him on the phone right now. So there's going to be a rotation of capital of this commercial real estate out of the hands of weak private equity guys at these high interest rates, and the private loan markets that are desperate for the coupon yield off of some of these properties, but who don't need 100% occupancy, be it 100% rents coming in order to make that profitable. They need 50% rents, or because they're not looking for a 2-year or 3-year capital appreciation maximization strategy. And, basically their balloon goes up and they get paid out. They're looking at taking these things on, for 30 years and having an income stream. And so therefore they can live with far lower profitability per se in order to make sure that the coupon payments are covered, because they just want the predictability. The Bank Term Funding Program is truly a stopgap. It's not a bailout, because it's at Fed funds rate. So it's too expensive. And so it's, the current balance is $109 billion. If Powell was bailing out the regional banking system with it, it'd be $2 trillion. The balance would be $2 trillion, not $0.109 trillion. So I think it's a good thing. It's actually saying, hey, if you really need to shore up your balance sheet, either get rid of some bad debt, sell it off, or raise capital. It's telling a lot of these banks they have to go out and raise capital. Hi, I'm Tom Luongo, and you're watching Think Smart Education.